Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, September 23rd, 2013. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading, we saw the market change trend. We had a setup for that with that spinning top type candle, a small black body candle at the end of a very strong first time frame downtrend that had been in force for quite some time, and confirmation of that change of trend with the previous day's trading, with the market making a lower high and lower low and a very bearish candle, and the market testing to the previous close by resistance area and finding temporary support there for that day's trading. For today's trading, the sellers have once again been strong enough to take out the previous level and close in a moderately bearish manner down below there. For today's trading, however, we do see some buying coming into this market, and coinciding with the market testing to and just below the 1700 round number level of previous resistance. That area is now acting as support, and we've seen the sellers lose commitment around that area. We still have a black body candle that suggests that the sellers have maintained some downside momentum, but it's slightly smaller than the previous day's trading, so some of that momentum has dried up, but it still is large enough to be significant. But the worrying factor here is the market closing nearer to the midpoint level than to the low, suggesting that the control that the sellers have taken by the close of trading is only quite minimal. It's only fairly weak control, and the sellers did have strong control as they were trading down below the 1700 level, but as I've mentioned, they lost commitment throughout the trading day to close the market back up towards that level. In terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market's trending down in that first time frame, and here today we've seen the market test below the 161.8% level and being rejected from there. So this does suggest a possibility of a change of trend. So considering that even though this trend is down, we have a black body candle, the clue that we're being given here is the weak close, and it's not saying that we have the buyers strong in the market. However, it's saying that the sellers have lost some momentum and there is potential for a change of trend. What we're looking for is a higher high and a higher low. There's no strong likelihood that that will happen. It's a weak suggestion, and that's based on the market interacting with the 161.8% and the rejection from below that level. So we require confirmation. We will be looking for a potential higher high and higher low. In terms of the Fibonacci extension of this very substantial first time frame uptrend, the market has traded in a moderately bearish manner today through the 23.6% level with some price rejection. Our next target here is the 38.2% level. There is a possibility that if this trend does continue down, that the market will trade down to that level. That's at 1690, and then down below there the 50% level is the next target at 1678, and that will coincide roughly with the top of the cloud and with the area around the Kijun-sen where it's trading at the moment. So some very substantial support for the next a couple of days, trading down around that 50% level. In terms of Ichimoku, obviously still a bullish market in that long-term time frame, with the market trading up above the cloud, and the cloud, if the market does continue trending lower, may come into play over the next week or so. The area of the cloud will be moving away from the market where it's trading at the moment, so it provides a dynamic level, and this market could continue trading lower until it finds support at the cloud. In terms of the Kijun-sen, the pink line here, the price action is above the Kijun-sen, so we have a bullish market in that medium-term time frame, and the Kijun-sen is pointing flat, and we are now seeing price action attracted back towards there. It maintains being flat, and there's a suggestion that we could see the market trade lower. If the market does trade lower, obviously the area at the window that was opened up about a week or so ago from about 1691 down to about 1688 may come into play, and coinciding with the area around 1687 may offer itself as very strong support for this market. In terms of the Tenkan-sen, however, we have the market trading around the Tenkan-sen and closing just below, so technically the market is bearish in that short-term time frame, and it's been some times since we've seen the market trading down below that Tenkan-sen, so somewhat of a change of sentiment in this market. But with this weak close, we really do need to see some follow-through in this market to confirm this close down below the Tenkan-sen and suggest a bearish sentiment in that short-term time frame. Crucial to this market will be the round number 1700 level of support. If we see the market trading down below the current low here early, and there is a good possibility of the market trading lower, as I've mentioned, the area around the window and the area at 1687 may come into play. If we see the market bounce off this level, the previous resistance at 1709 is important, and we then could see the market, if it trades in a bullish manner up above there, we could quickly see the market testing up to the major highs up around 1729.